We have ourselves a new trading session, a new trading week, and a new trading month right here on Wall Street. And if you're wondering what direction will the markets move for the month of August, are we going to see some serious gains or some serious losses? Well, we're just going to have to wait and see, because if the markets last week are any indicator as to what's to come, then get yourself ready for quite the roller coaster ride of reports and movements in both directions, because last week all three major averages, the Dow, the S&P 500 and the Nasdaq, all hit record highs during the trading week. Leading those gains, the tech sector, Apple, Microsoft, Google parent Alphabet, Facebook, Amazon.com and Tesla, all seeing strong results. While at the same time for the entire month of July, the U.S. markets still saw some solid gains, this coming despite a rise of volatility due mostly in part to concerns of the spreading Delta variant. The Nasdaq and the Dow adding 1% and 1.4% respectively in July, while the S&P 500 up 2.2% over the same period. This all heading into Friday's close. Utilities, healthcare, real estate, and tech stocks leading the S&P 500 higher for the month. And then also in the headlines were Chinese EV stocks, as well as the broad China markets, which continue to see a roller coaster performance alternating between highs and lows as the Chinese government alternated between cracking down on a variety of industries while also soothing investors that were made nervous by its new crackdowns. But now it's time to look ahead. We have a new week, a new month. What direction will the markets move in? Let's now take a look at what will likely move the markets in the week ahead. Now we first kick off the week overseas in China with that nation's CAIXIN Manufacturing PMI read. Expectations call for a read of 51. Meanwhile, it's a busy day in Europe with both German and Swiss retail sales figures, and we also have the release of manufacturing PMI, market manufacturing PMI reads out of Spain, Italy, France, Germany, the entire EU, the United Kingdom, as well as the United States. And speaking of the US, out of this country, we had the release of ISM Manufacturing PMI figures for the month of July. Expectations call for a read of 60.8. Tuesday sees us begin the session down under with the RBA interest rate decision. That's expected to remain unchanged at 0.1%. Meanwhile, right here in the United States, we have the release of June factory orders. That's expected at 1.1%. Wednesday then sees us go back to the other side of the globe at New Zealand with its second quarter unemployment rate. That's expected to come in at a read of 4.5%. While in the EU, we do have some more data reports. We have June retail sales figures. That's expected at 1.9% month over month and 8.2% year over year. While right here in the U.S., focus will be on private payrolls. ADP private payrolls, they're expected to come in at a rate of 721,000. Thursday then sees most focus on the United Kingdom. Not only will we have the release of the Bank of England's monetary policy report, but we'll also see the Bank of England's interest rate decision expected to remain at 0.1%. And then on Friday, it's all about the United States and the U.S. employment report. Investors around the world will be keeping an eye on July non-farm payrolls expected at 900,000, while the U.S. unemployment rate expected to improve to 5.7% from 5.9%. So keep an eye on all of those economic reports. Also keep an eye on earnings, which are not complete yet. So expect a lot of movement in either direction, depending on the results. And until next week, live from the New York Stock Exchange, I'm James Swinney, reporting for ICM.